We can see both monitors. What do you mean both monitors? Confused. I am a little bit confused. What do you mean by that? Okay. Anyways, let's get started. So when it comes to, oh, well, that's not a monitor. That's just I don't know what Zoom. Not it's not Zoom. Discord does, but yeah, that's supposed to be face, I think. But my camera's not on. Anyways, so let's talk about EQ. I'm not gonna be doing like a weekly breakdown. I think Elijah did that. I don't know what pair he did it on, but I'm just gonna be focusing on the higher time frame bias, how to build it, etc., etc. In terms of entries, I'll probably do that another time. Entries is not really that important at the moment. I think the most important thing out of everything is the higher time frame bias, because if you're wrong in the higher time frame, it doesn't matter how good the lower time frames look, you will take an L, right? So, okay, let's start. Now, there's for higher time frame bias, there's a couple of things you have to. Let me actually turn this indicator off. Okay. So when it comes to higher time frame bias, there are a couple of things you have to keep in mind, right? Number one being that the market will always leave liquidity for later. Okay, that's number one. Number two is whatever happens, like the whole concept or our whole concept or strategy is based off of buyers and sellers getting induced and trapped, right? So whatever we taught, it's not really relative to one single time frame, right? And the reason I say this is because when you look at the higher, let's say our entry model, right? We look for liquidity to be swept, and then we look for a build up, and then sweep of that build up into that liquidity block. Now, same thing goes for the higher time frame, right? Now, it doesn't necessarily mean that we're gonna take it from the higher time frame liquidity block. If it makes sense to, and RR wise it makes sense to, and you're able to, then sure, why not, right? Now, let me, okay, so I'm on the daily. Let me go down to, actually, let's start from the daily. All right, so we know NQ statistically, right, is a, what is it? It's a bullish asset, right? You can see that. Number one. Number two is on the daily, you can see a couple of areas that are being respected. All right. Now, we have swept something here, okay, which caused the move back up. And the reason is pretty simple. We have an LB, okay? So we end up using that to move to the upside. And what did we do in this area? We took this high out, okay? We respected this one and moved away. So what does that tell me automatically? Guys, I want this to be interactive. So when I ask some questions, try typing. When the market respects this high right here, what does that do? Liquidity above, exactly, okay? So now we have some sort of liquidity above, okay? Leaves liquidity, exactly. Okay, perfect. So we started moving to the downside, and we have, and also this is another thing you guys have to take into consideration, right? So we printed, obviously, we swept this low in the beginning. This was an LB, okay? Price came and swept this low using this LB right here, right? And then decided to move bullish from there, okay? So now it's telling me that we are building some sort of liquidity, All right. Then we come down and we respect this LB that was created. And then we move away. Okay, now that's sold off. Okay, we swept something here, left liquidity there, and we sold off. All right. Now that's telling me, as soon as price comes down here, that's telling me that we are building liquidity where? Where? Right here. 1 second. Let me just delete this. Delete. Oh my God. All right, delete. Okay, we are building liquidity below this low. Okay, pretty simple enough. So now in this scenario, what we could do is we understand there's liquidity here that I could come for and liquidity here that I can come for. But we have to look at the most relative or the most relevant point of liquidity at this moment. Okay, so if I go down to the 4-hour time frame and open up this price action a little bit, clearly we have liquidity above here and we have liquidity below here. All right, simple. We have come into the low, built liquidity below the low, came into it again, built liquidity, more liquidity there. So there's a ton of liquidity below that low. All right, so what that tells us is as soon as price, okay, comes into an LB, traps early sellers, we can now sell into the liquidity, right? Which is right here. Okay, simple enough. And do we have an LB? High gets taken. And we induce higher once more. And then we get that short. Okay, now if I go down to the 1 hour to open up this price action a little bit, you will see that we clearly built liquidity where? Here. Okay. So now what we could do is wait for price to do what? Trap the sellers into the liquidity block and then sell towards the lows, right? And this all comes from the higher time frame bias, right? So we're literally on the daily and the 4-hour when looking at it, and we're kind of pinpointing where price can end up going. All right, and once we do that and price does this, traps the early sellers, maybe comes into the extreme, right? We can look for, let's say, the extreme entry because we have the liquidity block. We can also look for continuations all the way down to this low. Okay, so now the continuations, it could be very rapid, right? So there might be only one entry, or it can come into the low, right? Same thing, build, sweep, and then sell back off. All right, and that kind of gives us, number one, our direction for, let's say, a day, maybe 2 days, 3 days, and we can short into that liquidity. All right, so it's like could give you a couple setups. Sometimes it only gives you one setup, and sometimes it's unfortunate, but that's basically how it is. Isn't this LB with structure? Yes, it is to an extent, but if you look at liquidity wise, right? Or yes and no, it's with structure and without structure. Because if you look at it, all right, what do we do here? We printed a low. What do we do here? Printed a high. Then we moved lower, breaking structure. Lower low, lower high, lower low. We built liquidity here. Lower high, lower low, right? And you can see that this low broke. Okay, so yes and no. Like overall, yeah, it looks like it's with structure, right? And yeah, pretty much. But the overall direction for this is that we are bearish. Okay, so when we look at the higher time frame, we're looking at it in the perspective that price needs to do what? Because look at this, right? If you look at it, let's say from the 4-hour perspective, what happened here? We printed a low, we moved higher, okay? Printed a low and moved higher. What does this do? What's that right there? BOS. Okay? BOS. So essentially, we induce buyers, exactly. Okay? BOS. If I say BOS, it means if there's a BOS to the upside, we induce buyers. If there's a BOS to the downside, we induce sellers. Okay? Now there's also another thing you guys have to take a note of, right? Just because we've induced buyers, it does not mean it needs to come for that low. Okay? Because we all know the market can leave liquidity. All right? So, for example, why did we have this move up? What's the reason? Because we don't have enough liquidity to go below there, right? If we don't have enough liquidity to go below there, it needs to induce more traders, right? Look at this bullish move. Pretty rapid, right? What does that tell us? Volume to the upside, whatever, right? Whatever people want to see it as. They get induced and then ultimately get trapped, okay? So we have this BOS, meaning this whole area or any buys above this low right here is essentially going to be a trap, okay? So we come into it. Let's do this 1 second. Come into it here. This is going to be a trap, right? We move to the upside. We take out something here. We also take out this high over here. My drawing is kind of wonky, but yeah. We take out the high. We move lower, okay? Now we're coming here and building more liquidity. So that tells me that we have liquidity below here. And also, buyers induced, right? So they should be trapped, right? Higher time frame wise. So if I go on the daily, right? And this is why I like to switch between the time frames, because when I go up to the daily, like 4 hour, right? If I'm too zoomed into the 4 hour over here, I'm not going to really pay attention to everything over here. If I go to the daily, very, very simple. What does that tell me? Simple structure right here. We have low, higher, high, right? And then we're building liquidity here. So now there's a reason why we're coming below that blue line, okay? So we can actually trade towards that liquidity. We look these early buyers to trap after it makes on chart of BOS. I'm not really sure if I understood what you said. We look. Yeah. Can you like reword it? I'm a little confused. Okay. Anyways, so we have a reason to come below there now, okay? Because we've built liquidity. This right here just tells me, this BOS right here tells me I am not allowed to buy in these scenarios, right? In this area. Maybe here I can buy because we have some sort of liquidity, right? And it only if we have something to target as well, right? But it would be lower probability if I do that. Why? Because it's with structure, right? If it's with structure, it's lower probability. Now, let me go back to the 4 hour. We have built liquidity here. We move lower, right? Very, very simple. Let's play some PA. Boom. Takes out high. Not only does it take out this high right here, comes back, respects the low again. All right. Now it's telling me there's a lot of liquidity there. Okay. So now it could possibly come for an internal up here or even up there, right? What happens next? Boom. Price comes for all of it and then sweeps. Comes all the way to the extreme. I believe it comes all the way to the extreme. Yeah. Okay. Comes for this last point right here, inducement high, and then sells right off to the lows. All right. Now, like I said earlier, right? Sometimes there's a couple of entries that are given. Extreme entry. There might be a lower time frame entry over here. There might be, price might stall in this area, right? But the reason it didn't stall is because we've done this. We've taken out the liquidity. Boom. We've induced and engineered more. We've induced sellers by taking out this low right here. And we have engineered liquidity below there. All right. So now that we have engineered liquidity below there, most likely price is going to sell right off. Okay. Now if we don't, right, and we don't do this right here, sometimes you'll see price slows down in that area, builds more, boom, sweeps, and then if there's an LB over here, we can take that short all the way to the lows. Like that. All right. Simple enough. Before I move on, I just want to know if everyone's on the same page. I think what he's trying to say is we look for early buyers to be trapped after it makes a BOS. If that's what he said, then yes. But like I said, it doesn't always. Buyers don't always have to be trapped. Just because they're induced, it doesn't mean they need to be trapped. Okay, if there's no liquidity there, then there's no reason for them to be trapped. Now, once the low gets respected, so let's say something like this happens. Okay, boom. We induce buyers right here. If price comes into the low, moves away, now we have some sort of liquidity here. All right, simple. If we don't do that, price does something like this, and then we come back into it, boom. Now this could be used to move higher, for price to move higher. All right. Does that make sense? Okay, perfect. So we get this sell off. Okay, we're into the lows right here. We would wait for the lows to go. Okay, so let me play some PA. Low goes. All right, the low is swept. Now, what can we do in this scenario? Can we buy? Are we allowed to buy? Let's say, what day is this? Okay, actually, play some more PA. Okay, are we allowed to buy in this scenario? No. We wait. Exactly. Perfect. Why do we wait though? What's the reason? What's the reasoning? It might just be a whole day of price being at this low, right? Big fall, liquidity was taken, needs to see more PA. Exactly, that's perfect. I like that everyone's on the same page. So we have induced, let me erase all the drawings now. Boom. What do? Go on the daily. We move to the downside. We've taken out this low. So now damn. Who did we induce? Sellers. Exactly. Abhishek said early sellers didn't trap or didn't get trapped. Let me just go on the 30 for a second. Okay. Okay. Price moved lower. BOS to the downside. Okay. Boom. Induced who? Abhishek, this is for you. Induced who? Sellers. Exactly, right? So we've induced sellers. Boom. Sellers want to sell. They get trapped. Okay, all the liquidity is taken. What do we have above? What's this right here? Liquidity block. Exactly. Okay, so we can take an extreme entry right there. All right, all the way to the lows. All right, now I don't want to really go into entries. That will save it for another day, or because I think the main focus should be the higher time frame. Because I get a lot of questions about higher time frame. Okay, now this right here that occurred, adds more of a confluence to sell off as soon as this high over here gets taken. All right. It's an added confluence. So it just makes the probability a lot higher. The more confluences you can stack up, the higher the probability is. All right. So we get price moving to the downside, and we don't look to buy here. Why? Because we don't know if it needs to come for this, if it needs to come for this, you know. We can see that this right here is an LB. Okay. Of some sort, I think. It is. Okay. But we also see that we have built some sort of liquidity here. All right, look at this. Little staircase going up. Boom. There you go. So we could come for that too, right? We don't know that though. It could come for it, it could not come for it. Does it end up come for it? No, it doesn't. So far, at least it doesn't. So that's the reason we don't buy in this at this low, because I don't know if price needs to go lower or not, right? I just understand that sellers have been induced. And what do we have? We have liquidity above here. Okay. We also have liquidity above here now. So when will the bias change to the upside? What condition? Right now, I would say we don't buy yet, but we will be interested in buys very soon. We just need a liquidity block to form, which it probably just did right here. Right? And if we get price moving back to the upside and coming into these highs, now we can confidently say that we are bullish in this scenario. All right? Does that make sense? Okay, perfect. So let's go to the 4-hour time frame. Play some PA. All right. So now we get price doing what? Moving to the upside. So now I can kind of say if I'm interested in longs occurring. Why? Because if I go to the 1 hour, we can see that we are building some sort of structure moving higher. Okay. Boom. Right here. What did we do? Very, very simple. Even on the hourly, we got some form of liquidity there. Okay. Let me just go on the 15. Look at it right here. We respected this high. Moved away, right? We built moving lower. We have come into, I kind of gave the answer, but anyways, we have come into the low, sweeping the liquidity from the left, inducing sellers on the higher time frame. Okay, so now that higher time frame, now that the higher time frame low was taken, we induce who? Sellers, right? So sellers induced, BOS to the downside, sellers induced. What does that tell me? These areas, any reactions from here should be a trap. Any reactions from here should be a trap. Okay, simple enough. Now, what do? We can go to the lower time frames. Obviously, I don't want to go too much into the entries, but what do we have on the lower time frames? Induced higher. We built here for quite a bit. Look at that. And then we swept it. All right. And then we move higher. So we understand that price has now induced sellers. We should come back into the highs. All right. So if we can get an entry model here, you can obviously enter. Okay. Now, start moving to the upside. Boom. What do? Can I buy yet? Can I buy up here? Into these highs? Nope. No. Okay, that's good to hear. All right, so what do we end up doing? All right, very simple. What did we do here? What did we do? We came, we built at this low right here. Okay. We induced higher. Boom. Who do we induce here? Buyers, exactly. So we induced buyers, and now we have trapped them. Okay? We've trapped the buyers. All right, we came into something here. I don't see an LB, so no extreme entries can be taken in that scenario, unless you want to take some higher time frame thing like this. But then your stop loss would have to be below here, right? Which kind of shoots your RR, and you know, yeah, just kills your RR. Anyways, move to the upside, and I believe there was some sort of entry here because I remember this PA. But anyways, on lower time frames there was one entry. All right, so we now move to the upside. Now that we've moved to the upside, taking out this high, we induce who? Buyers, right? So if you're not able to get into longs within the move, now you kind of have to wait, sit out, right? Because we don't know what's going to happen next. All right, we can still build at this high right here, okay? Or we could just sweep, right? If you're able to get in, and just hold, right? You hold, take some partials at the structural high, hold to the higher time frame move. Why? Because price can either build here, right? Or, I mean, build and then sweep and then move higher. Or, what it could do is simply just move straight to the upside. All right, that's possible as well. Okay, so let's play some PA. What happens? Price start moving to the upside. All right, we end up taking out the high. Very, very simple. All right, so if you're able to get in there, you hold towards that right there. Okay, but look at this. After this low was taken, maybe down here, you don't take an entry because you don't know if it needs to take out more liquidity points. If there was an LB here, then you're able to take it from the extreme, okay? But obviously it would have to be lower risk because it's a higher time frame. You don't know how much lower it needs to go, etc., etc. So yeah, pretty much. After that, we move to the upside. We induce, trap. Could look for something here, right? We have identified the higher time frame bias, right? By taking out this low, inducing sellers. We also have liquidity, the blue line, right, to target. So you can look for entries here, 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 whatever, and then all the way up to the highs, right? Could give you a couple of entries. Now, all you had to do was go on the higher time frame and just figure out the bias. Once you figure out the bias, it's so much easier, right? 2-3 days. You already know what the price action is looking like. You already know what to target, right? Very simple. Okay, now you frame it out on the higher time frame. Could give you a couple of days worth of trades, right? And sometimes it just gives you 1 day worth of trade or 1 day trade, and that's it. And sometimes those are unfortunate, but you know, that is trading. All right, let's play some more PA. Let's play some more PA because as of right now, you don't want to be doing anything. We're just taking out the liquidity over here. We don't know what price needs to do, right? Waiting is the most difficult part. You just gotta wait, bro. I mean, obviously a lot simpler said than done, but you know, there comes a time where you kind of realize that, you know, you're gonna be hurting your P&L. You're gonna be hurting your finances, etc., etc. Okay. Can I see a huge imbalance as a confirmation to buy or sell into? I don't like doing that, right? Because I like to look at, let's say, highs and lows um, as where liquidity is. Imbalance doesn't really tell me liquidity, if you get what I mean. All right, so we've taken out these highs. Now we have to wait. And this is the other thing, guys. When price action's at this low, it doesn't mean I'm not looking at PA, right? I might look at NQ, be like, okay, you know what? I'm not gonna buy this, but I might just look at another pair that might look cleaner. You know, that's why I keep a couple of pairs in the background, right? So obviously I stick to this as the main thing I look at. But sometimes I'm looking at US 30, sometimes I'm looking at gold, you know? So if price action on NQ tells me I have to wait, then I'm going to look at another pair. If all of them tell me I have to wait, then I just don't trade. Right? Simple as that. All right. Let's play some PA. We just need to see something occur. Okay? Now, if price ends up selling off from here, right, and coming back into the lows, that is a different story, right? Our bias would be different. Right now, currently, I am going to look at, to be honest, every single one of these highs as a trap, right? Simple enough. Okay, so play some PA. Let's go. What are we doing? Come into the highs. This is me just sticking to the 4 hour, right? Obviously, on the 1 hour and the 15-minute, you can see that you can actually catch the trades back up. So, like, I'll give you an example, or at least until this high, or even this high. All right, actually, yeah, this high, to be honest. At least until there. What you could do is look for what? Same thing, right? And the thing is, guys, you can't look at it in terms of a pattern, all right? People like to look at it pattern based. They see this, oh, I'm gonna start buying now. We took out the low, right? What ends up happening? Price comes up, respects the high, boom, takes something out from the left, and then starts moving back up, right? That's why I never look at it in terms of patterns. All right. So what do we do here? Very, very simple. We have built at this low right here. Okay. Going 15. Where is it? Let's go right here. We built at that low. Look at this. That's a lot of candles. All right. Clearly tells me there's liquidity below here. All right. Simple. We build there. What do we do next? We come into the trap area. All right. Come into this whole area right here, the trap. What do? We sell off. We induce sellers. Okay. Within this area, you can look for something to enter longs. Okay. Come back. Now that we've induced sellers, what's this high? What's this high right here? This whole area, what is that? Starts with a T. Trap, exactly. All right. So, if we trap buyers, we can look for longs. Simple, right? We framed out the higher time frame move. Okay. Clearly know that we have liquidity built here. All right. So this is basically giving us a bunch of opportunities to take trades to the upside. All right, guys. So, what do? We moved higher. We have taken out something here. Okay. We have taken out this low over here. Am I allowed to buy here, guys? Talk to me. Am I allowed to buy there? Can I buy at this low right here? No. Okay? No? Who says yes? I want to see who says yes. No one says yes? Okay. Oh. Well, you guys are wrong. Right? You don't want to be buying here. Why? We have just induced buyers. Okay? We've just induced buyers. Yes, we've taken out some internal over here and we've created some sort of liquidity block. That doesn't mean I can buy here though. Okay? Because it's with structure. Right? I would rather wait for price action to tell me, hey, I'm going to use this low to move higher. Okay? So we print this low right here. Potential LB. We start moving to the upside. What do we do in this area? Number one, we're still in this trap area, right? We're still in that trap area right there. What do we do here, guys? We induce higher. Okay? We induce higher. What do? We print a high. We come into the low. Where are we building this scenario? Let me actually go on the 30 minutes so you guys can see it. Where are we building this scenario? Oh wait, you guys can't annotate, sorry. Okay, we induce higher, we induce buyers right here, and then we trap the buyers, okay? This is the inducement low. We built at, to be honest, this whole thing was a build up. But we come back here, we leave liquidity to the upside, because we actually respect the high, I believe, if I'm not mistaken. Yeah, we respect the high, we sell off, we leave liquidity for later, boom, we get that sell off. What is this right here? What is that right there? LB, right? We swept something and moved away, okay? We built liquidity. The whole reason why we're able to take it is not because of the LB. It's because of the liquidity, right? So we build liquidity here, and then we take out that liquidity, all right? This is something we can take. Over here, that's not something we can take. Right? And the reason is because we don't know if it needs to come lower, take this low or this low or whatever. Right? But once we've actually printed the low and moved to the upside and we started building at this low, now it tells me this could be used as an LB. You guys understand where I'm coming from? Yes. Yes, yes. Okay, perfect. So, now we have a reason to take this long. We have liquidity here. We're in this trap area right here. We can target that high. We can also target this high as well, right? This whole area. Boom, right? Take a long there. What happens here? We induce. We build liquidity. We come for... Even look at this. I don't know if you guys see it, but we come, respect something to the left, move away, we induce, trap. Can you explain again why we can't take long there? Why we can't take long here is because it's very simple, right? We have taken out the high over here. We've induced buyers, okay? This low, wait 1 second. This low respected this low. This respected this, right? This respected that, whatever, right? So we're building some sort of liquidity there. Okay, so that's the reason why. Because I don't know how much lower this needs to go. I don't know it's gonna flip bullish now, right? We've just taken out something on. We just taken out internal. Okay. What could give me a reason or a confluence is we haven't taken out anything from the left yet, right? But these are typically, or right here is typically, let me erase this one. Right here is typically where I don't like to take longs. Okay, I'd rather let the low form, let it build a liquidity block, and then wait for liquidity to build above the liquidity block and then take the entry. Right? So what do? We build liquidity here, we induce buyers again, Okay, and then we come and trap the buyers. Okay, we built there. That was the important part. All right, guys. What do you say? Last low that you have marked up, is it valid to take direct entry? Last low you have marked up. Are you talking about this one? Yes. It is possible to take a long entry there. Why? Because let it build. Okay, so we put in LB, we respect it, we're building liquidity, but we have not taken anything significant from the left, right? Once something significant from the left is taken, like up here, then it's a different story, right? So even this, I would be a little skeptical taking a long in this area right here because we did take something out, right? That's the only reason why I would be a little skeptical. All right. Can you do analysis on USD CAD? I'm not doing analysis, David. How do you pronounce it? That way. Not doing analysis on any pairs right now. I'm just focusing on higher time frame bias. Okay, this is the topic for today. I'm doing that. If you want people to analyze, I would wait for either the thing we give out market forecasts. We'll probably do it there, or you can stick to Elijah's webinar, and he'll go over that. I'm just trying to stick to a certain topic because I get asked a lot of questions about higher time frame bias, and yeah, pretty much. Okay, so what do we do? Where was I? What was I talking about? Oh yes, taking this out. So I would be a little skeptical taking it from here. Okay. Honestly, I probably would wait in live time. Like right now, in hindsight, it's looking nice, but in live time, yeah, I would probably end up waiting for this low to go. Or I mean, sorry, not that low. I would just wait for price to build another LB, right? What do we do next? Very, very simple. We move to the upside, we induce, right? But now, look at this. And this is the reason why you'd wait. Because look, we've taken out something from the left over here. So this could easily just do what? Induce, come lower, take out all this, and then start moving back to the upside. That could definitely occur. Okay? But what does it do? It doesn't do that. Boom, induces, traps them there, moves to the upside. We take out, one second. First we took out this high. So let's look at it this way now. Okay, we've come into this high. We're now building liquidity there. Sold off, induced, right? Induced sellers. We move higher. Take out the high right here. We induce some sort of buyers, okay? So what do we do in this scenario? We understand that we've just come into this high right here. Sorry, this high right here. Respected this. Okay, so we have liquidity above here. We come stab into it again. So we're building more liquidity above this high right here. Okay, so that's why I can take a long in this scenario. Here I'll be a little skeptical in live time. Okay, only because we've taken something from the left over here. All right, but now that we've already come into these highs, or this high, respected it, built liquidity there, and we came at it again, right? And look here, we build, channel, sell off, induce sellers, trap the buyers, take longs. All right, make sense? Okay, perfect. Just delete all this markings, all these markings. Actually, let me go back on the 4 hour. Let me delete or remove drawings. Okay. So now on the 4 hour, so the second inducement made buys valid, basically, right? So we moved higher. We're building more liquidity at the highs. So it's telling me the next point of liquidity it needs to come for are the highs, right? We're building liquidity there. So we just needed price to build liquidity at the lows, trap the buyers, and then we can look to take longs. All right. It's always looking at where the most relevant point of liquidity is at that given moment. All right. So, 1 second, guys. All right. Now what do? We take something out right here. All right. Simple. Taking out, we take something out right there. We're still respecting this high to the left. All right. So now, what do we do? Can we buy at this low? Can we buy at that low? Yes or no? No, exactly. Okay? We can't buy there. Why? We've taken something out. This is pretty significant. It's a pretty significant high. Okay? We've just taken that out. Although we left liquidity here, we haven't taken out that liquidity over here. Price can do what? What I say in the beginning of the call or the webinar. Go lower. I said price can leave what? This guy said leave me. Leave liquidity. Exactly. It can easily leave liquidity for later. All right? So, now we look at where the liquidity is. All right? Where's the liquidity, guys? Where have we been building liquidity before we've taken out this high? Internal, yes. Where? Oh, wait. Sorry, guys. I keep forgetting you guys can't annotate. Boom. Right there. Why? Simple. Respected lows. Structural liquidity. Right? Respected. Basically, we got a little staircase going up. Simple enough. A little trend line liquidity. You guys know I love trend lines. I'm joking. Anyways, so we have liquidity buildup over here. All right, all this right here is liquidity. Now we get price doing what? Price comes up, sells off. Am I allowed to sell here? Am I allowed to sell there? No, I like to hear that. Yes, perfect, exactly. No, I cannot sell there. Why can't we take liquidity level below that too? Have we built at this low? Has price come into it? Moved away? No, exactly. So it tells me we don't have liquidity there yet. Can it come for that? Possibly. I'm not going to say no, right? But I know that price has built liquidity here, so that's what I'm going to mark up, okay? I'm only going to mark up where liquidity is built. I don't know if price needs to come take this out or not, right? I'm not God. I can't tell the future, okay? So because of that, I'm not a fortune teller. I don't know if price needs to take this out. We could take it out. If it does, it just tells me it wanted to induce lower, take out more liquidity, which is fine, right? But the most obvious area of liquidity or buildup is right here. Okay, so that's what I'm gonna mark up so far. All right. So, just learn something. This guy's gonna say something crazy. Anyways, what do? We move lower. Okay, then we move higher. Okay, now what do we do in this scenario? We've induced one more time. We've taken out all this liquidity and we sold off. Okay. Now, I'm gonna go on the 15 for this. No entries regardless. But let's say price did this. Alright guys? Say price came into here. Actually, let's just get rid of all this in general. Okay. This is a little more advanced. And to be honest, I don't normally like to take counter bias moves. But now that we have come into, look what we did here, guys. Respected highs, right? We built at this low, okay? We took that out. We now have liquidity below here, okay? We move up. We trap the sellers, okay? Obviously, we didn't take anything from the left. So taking any shorts here, I would not do. Taking shorts here, I would not do, right? Once we get price coming back into the lows, let's say we got this happening. Price comes, does this, okay? Building liquidity, all right? Build some sort of liquidity. I actually drew it kind of weirdly, but let me redo this 1 second, guys. So we do something like this. Boom. We come into the lows, we respect this, and we trap sellers. Can I now short here? Okay, some people are saying no, some people are saying yes. The answer is you can, but it's lower probability. All right, guys? Lower probability. What does that mean? Number one, my risk cannot be the usual risk. It has to be very low risk. Plus, timing has to be spot on as well. Okay? Let's say we have, okay, let me give you a good example. Let's say 4 hour closes right here. We're building at this right here. We get the next 4 hour candle, sweep this high right here. We come back lower. We do something like this. Boom. I'll take that. Right? But my risk is not going to be as high as a pro bias move. Okay? So let's get, obviously, price actually just dumps off. Just means no entry for us. And what does it do? Dumps off. Boom, we get a pullback. We get lower prices. Sure. We induce higher. Okay. We induce higher. We've induced some sort of buyers now. Okay. We come all the way to the extreme. Nothing yet. And we sold off, right? In this area though, I'm going to 15. Now that we have done this, where we built liquidity here, we induced buyers here. Boom. We're respecting this low right here. Boom. Is this something we can take? At this high, can we take that? Can we take shorts there? Obviously, price pays off. Damn, can't speak English. Price plays out. But are we? Is that something we can take? If there's an LB, okay, perfect. I like that you said that. Do we have an LB? We respected this, so extreme entry out of the picture for me at least. Okay, we have taken out this high. Okay, unless you're gonna take a higher time frame entry, right here, you would have to keep your stop loss above here. Okay, why? Because that's the LB. All right, and we have left liquidity here. All right, that's the only way you can take it. That is the only way you can take it. And what's the reasoning? Why can we do this though? No, I think it is worth the risk because it's a higher time frame move. So if you did take it like this, let's see, boom, boom, and you're targeting this low, so it gives you a 1 to 6. And to be honest, this price is actually pretty volatile, so I think this happens in like one day. Yeah, pretty much. Happens one day. But anyways, I believe there was something here. Yeah, this would be very hard for me taking lifetime. Because we respected this, right? We sold off, taking out the low. In lifetime, this would be very, very hard for me to take. Because I would see this. Or wait for that to be taken. So, no confirmation. Extreme entry, you can possibly take it from here. But your stop loss would have to be above this high right here. Alright. What's the confirmation for that move to take? There was no confirmation entry. There wasn't. If it respected this low, sorry. If it respected this low right here, it took it out. But if it did respect it, pulled back and took out this high, that right there is Da Vinci. So you can definitely take that. But because it took out this low right here, I wouldn't take that in lifetime. Alright. Okay, so we get the sell-off. Sorry, what does extreme entry mean? Extreme entry is like no confirmation, just straight off liquidity is taken. Alright. No, obviously there has to be an LB. Like there's two steps to the entry criteria, right? I'm not gonna go too much into entries, but I'm gonna say this. Entry criteria has two steps. Number one, we need to see a trap occur. Okay. Number two, we need to see, what did I just do? Number two, we need to see trap. We need to see LB. Okay. Because look, there's two things to the entry, right? I can take the trade because the trap occurred, but there's no place to put my stop loss. Am I ever going to take a trade without a stop loss? No, right? So LB gives me the area for my stop loss, okay? I don't take trades just based off of liquidity blocks. If there's a liquidity block, sure, there's a place to put my stop loss. But if there's no trap, then there's no trade because there might be a place to put my stop loss, but where's the entry going to be? You get what I mean? Does that make sense? Okay, perfect. All right, so we get price moving all the way back to the lows right here. All right, now there is still some areas it could come for. I don't know if this low needs to go, right? If this was to occur, let's say price induced higher to induce lower and then moved higher. If that occurred, then I could use this as a liquidity block to take an entry. All right, I could just take it straight from here, my stop loss there, and target the highs. Right, I can do that. But this didn't occur, right? We don't have a clear or a clean LB there. So I don't know if that low needs to get respected or not. All right. So this is a scenario where I would just wait. I'll look at a different pair. Price ends up, what does it do? Induces higher and it comes lower. If there's an LB to the left, I don't know if there is. Let's see. Nothing. No LB to the left. In terms of entries, I don't even think there was an entry. No, nope. Unfortunately not. Price moves lower. Let me go back on the hourly. We'll wait here for hours. Anyways, okay. What do? We sell off. We've taken out all the liquidity needs to take out. All right. So now, can I sell? Am I allowed to sell? We have an LB here. Am I allowed to sell? No, exactly. I don't see a reason for price to come below here because we've just respected the low. All right, that's all that happened so far. We got price action moving higher. We induce lower after taking out something from the left. All right, very simple. Nothing to look at yet. What do? We come into the extreme. We start moving away. Okay? Come to the extreme of this low. Where do we have liquidity in this area? Very simple. My eye is going to get drawn to this high right here. Why? Very simple. We respected it. Moved away. Look at this massive move down. Look at this compared to this. More volume to the downside, right? What does that tell me? Sellers induced. We've also, what? Taken out lows, induced sellers. What can I do in this scenario? Can I buy? Shouldn't buys change once the liquidity was taken? 26, or are you talking about this? You talking about this? On top. No, we're still respecting this right here. We built here. Look at this, it's very simple. How do we build liquidity? Right there. We build liquidity like this. Okay? What's this right here? Liquidity, right? So we're expecting liquidity, so my bias is still bullish. Okay? But I need to see price trap sellers, buyers, which it just did. Okay? And then I need to see liquidity being built, which it is doing right here. And then I can take longs, right? So let's say price ends up moving higher, takes out something here, or even induces high right here. And then comes and takes out this buildup right here. Then I can take the longs back to the upside. All right? Simple? Okay. Perfect. So what do we get? Price moves up and takes out the highs. Okay? So now we understand we have liquidity right here. Okay? We have liquidity right there. So we built liquidity there. We moved higher. I can't take any longs yet, right? What ends up happening? Come into the highs, right? Come into the highs. Let me go to the 4 hour. Because what I need to see is a build up. All right, time frame wise, I would like to see a build up of liquidity. Maybe take something out there, come back into the extreme, respect the high again, sell off. Okay, take out some liquidity, and then move back to the upside. All right. All right. So we get price action taking out the low. All right. What do? We have come into this area right here. Okay. Nothing interesting yet. We sell off, which makes sense. We induce here. We induce buyers there. We sell off. We take out the lows right here. Now, this I'll tell you guys. Everyone that was on live call with me for the past I don't know how long. You guys all know I did not look for any buys in this area. Why? Because we respected liquidity. All right. I didn't want to take any longs there, right on NQ. Even though I was bullish, I didn't take any longs. Why? Because We built some sort of liquidity here. Now, it does make sense for price to move back to the upside, but I like to wait for all the liquidity to be taken. Why? Because you'll see what happens. And this is why I said sometimes the market leaves liquidity for later. All right? So what happens? Boom. We induce higher. Okay? We induce higher right here. What ends up happening? What do you think is going to happen? Do you guys think it's going to come for the... This is magic. Do you think it's going to come for the liquidity over here? You guys think it's... Okay, perfect. Why? Because, look, we have respect. We've built liquidity here. We literally respected liquidity and moved away. All right? So automatically it's telling me that we have a reason for price to come back lower again. All right, guys? What do we have below? Some sort of LB. We built liquidity. So now we built something here. Meaning if we get BOS, induces buyers, we trap the buyers, we take out this liquidity from the left, we can look for longs all the way. Like, I personally, and this is why I didn't take any buys in this scenario, right? I didn't take any buys in this area. Why? Because this right here told me we're going to come back for it later. Boom. As soon as this is taken, now we can move back to these highs. Okay? Simple, simple. What do? We have... Why can't it go up more liquidity there? It could. It's just in my, like, from my experience, obviously it could. Like, this could have been the low. The price moved up higher into the year. Right? And then in this scenario, it could come back into here, take that out, and then move all the way back to the upside. Okay? But I didn't want to take any longs because we're coming out of liquidity. All right? Sometimes you'll see price will actually, especially if it, what did I do here? Okay. Okay, so sometimes you'll see price will leave liquidity to the upside if it's not ready, and it'll come take this out. Okay? That's why I avoid these moves right here. I avoid that because liquidity. You feel me? It's just easier to take trades once liquidity is taken. If we're respecting liquidity, then the probability in my head is a lot lower. And if I'm like on edge about direction, then I'm just not gonna trade. Right? I might look at a different pair. I might hop on gold, or I might hop on US30, YM, whatever, you know? So almost no entries for more than a month, basically, for NQ at least. For NQ. I mean, not really. There was entries here, like I talked about. There was something over here. In terms of this price action, yeah, I don't see anything crazy. In this area, sure. Induced lower, moved higher, like, sure, we can take entries here. I just zoomed past it because I want to focus on the higher time frame. But yeah, pretty much we have come into highs, we take it out, we built some liquidity, right? So there's a reason why I'm expecting price to come below here. All right, so we move away, we take out the high. Now if we sell off, right, and we come into lows, pull back, take out something from the left, we can sell into this liquidity. You got me? Simple? Alright, so let's play some PA. What happens? Price does what here? Oh. Price does what here, guys? We come into the lows. Okay. Induce. Trap. What do we have here? All right. And yeah, so we induce sellers, we trap them, we come into LB. It's still be lower probability because we are still respecting this right here, but we've already induced here. All right, simple enough. If you guys are not following, let me know. You guys are good? Okay, so now this could be an entry, right? Towards here. If you're, if you're ballsy enough, you can hold it until here. You feel me? Okay. What happens? We induce higher, and then in this scenario, it actually induces all the way. So what happens? Takes it out. Okay? This is why I say low probability, right? You can take it here, sure. Obviously, you would have to go BE at some point, or reduced loss, one or the other. We induce higher, which is fine. And I believe now this all happens. Soon. If I'm not mistaken. Yeah, from there. Now, sell-off occurs. Okay? Why was it low probability? Can you explain? Because here. Any shorts, in my opinion, is going to be lower probability. Because of that reason. Alright? Alright. So, we are building. We come into here. Now, we could get some longs out of here. Alright, we've just trapped. We could get some longs out of here. Price could do this. Take out some internal. And then do what? And this is the thing. You would have to partial out at internal levels. Why? Because they could easily drop towards liquidity. Alright? Simple enough? Do you consider LB or entries to back candles like a sweep or always from the left on H1? No, I'm just sticking to H1 in the 4 hour because I'm focusing on higher time frame direction, right? That's the topic of today's webinar. So I'm not really going to the 5 minute or the 1 minute or whatever to look for entries. Because I did say at the start of the call, this is not a webinar for entries. We're focusing on higher time frame because we need to build that higher time frame, right? Because if lower time frames look nice and a higher time frame says otherwise, then you're gonna take an L, no matter how amazing the lower time frame looks. All right. Okay, so we could get some reactions out of here. Could get some longs out of here. We do have that right there. We induced lower, moved higher. We have some sort of LB here. Now, again, right? Buys here, lower probability. It will have to be low risk. Sells, lower probability, low risk, right? What can occur? This right here can occur. We could get buys back up to the high, and then we can sell right off, okay? These two trades, if you are willing to take it, are going to be lower probability. So you'd have to do low risk on both of them. You feel me? Reason because we have liquidity right here. Very simple. Are the red areas with liquidity? There is some sort of liquidity below here, okay? But we did also build here and we have some sort of LB, okay? That's the only reason why I would say I would long from here. Because of this, that buildup. If we didn't have a buildup, hell no, I would wait for this to go. Before looking for anything. Okay. So, what do we get? What do we get? Let's play it out. Oh. this. Delete. 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 We got price action moving back to the upside. Okay. Boom. Look at that. Like I said, could long from here. Why? Because we have LB here. And we built liquidity here. Alright? So, gives us some sort of reason why we can long there. Can we short here? We've just engineered liquidity here. Okay? And this low over here already built liquidity below here. Okay? And we've just trapped who? Sellers. And we have this right here. Like I said, both of the longs here and the shorts here would be lower probability. How do we identify how big the red area is going to be? Just look at the low or the high. Like, I mean, you could draw it all like that. It's very, I'd say it depends on the person. I just like to mark out the whole area. Kind of like a POI. That's how I look at it. For smart money concepts or other retail concepts or whatever. Supply demand zones, you know, all that. Anyways, so we have LB, trapped sellers, lower probability, so your risk would have to be very low. Oh, my bad, guys. All right, what ends up happening? We short. Okay. Boom. Pretty simple. Okay, now we have taken out liquidity. Right, guys? Simple, simple. All right. What do we do next? What happens? Price induces lower. We build a lot of liquidity here. We come into pretty much the extreme, not the extreme, but we take out this low to the left right here, and then we start moving bullish. All right. Started moving bullish. What do we do? Let's go on. Yeah, let's stay on the hourly. We built liquidity here. It was an entry you would take. What do you mean? Which one? $7 a.m. Are you talking about right here? Yeah, why not? If I'm actively looking at price action, or like let's say I set a higher time frame limit, yeah, of course. We have an LB here. We've just done what? Induced, trapped. I've been waiting for this low to go the whole time, and I've been saying if price comes below here, we can get longs out of there, right? So of course, it would be like a higher time frame entry if I was to take it. But yeah, I have not been focusing on higher time frame entries for quite a bit because I've been dabbling into futures a little bit, right? So yeah, pretty much. All right, so let's see. Would you take these short trade or not because you're bullish on a higher time frame? Like I said, right? It's valid to take, but it'll be a lower probability, so your risk would have to be a lot lower. Okay? This one's valid, this one's valid. But just lower probability, guys. Right? Meaning risk a lot lower. Alright? Okay, so we have taken out the lows. Now it is a pro bias move. Why? Let's zoom out. Let's go back on the 4-hour. What have we been doing? We've been building here since November. Okay? November 4th. We've been building at that. Sorry, we've been building at it since Yeah, November 5th. Okay? And now it is January. So look at that, guys. Pretty simple, honestly. We have built liquidity, a ton of liquidity above here. We've just taken out all the liquidity it needs to take out. We have an LB here. What does that tell me? I am bullish. I can take longs. What do I need? I need some form of liquidity, which I marked out already on the 1 hour. I just need price to respect the highs, sell off. I can take longs. And these are the moves where I put a lot of risk on. Okay? Okay. Now, let's play some PA. Like how much? A lot. It depends. Like if all my confluences line up, I don't really do percentage wise. Okay, no, I'm not at 25k here. Relax. I would lose my mind if I was 25k. But yeah, in my standards at least, I think anything above 10k I can't do. Even 10k, my heart will be racing a little bit. But yeah, pretty much. So if we get a sell off here, we induce who here? We induce sellers. Okay. So what do we do in this scenario? We can look for longs. All right. So let's play some PA. We're building. We're building. This is good. We induce higher. We're still within this trap area right here. We're still within, to be honest, all this. All right. Where would a sell be? As of right now, nothing. Let's play some PA. Boom. Okay. Simple enough. I think I did a breakdown on this trade already, guys. But yeah. Okay, so we move back to the upside. Boom. We got a sell off. Right there. You can enter here. You can enter here. Yeah, you can enter there. We've induced. Trapped. If you enter here, though, your stop loss would have to be below there. Alright. Anyways, stop asking about entries, guys. Focus, focus. Higher time frame. That's what we're sticking to. I'll do another webinar soon. Maybe in the future sometime. Just focus on entries. Right now, just familiarize yourself with the higher time frame, okay? Because I don't want to hear my higher time frame is, lacking or whatever. I'm doing this whole webinar so you guys can focus on the higher time frame. All right. Okay, so we have induced sellers. We have a ton of liquidity. Pretty simple, right? What do? Buys all the way back to the upside. Now what can we do? We've just trapped who? Guys, who do we trap? Sellers. Okay, so where's the next point of liquidity, guys? Talk to me. We've just trapped sellers there. This was months of liquidity. All right. What do we have below here? And where have we been building liquidity? All right, so we've induced BOS, trap, right? Next point, right here. And then if you play price action, boom, you get that sell-off. There you go. Right? You guys are kind of following now whatever we're looking at higher time, I mean lower time frames with entries and all that, so we do the same thing with the higher time frame. Okay, we look for where liquidity is being built. We look for where buyers and sellers are getting induced, and then we trade towards there. I mean, we wait for the trap and then we trade towards there. All right, guys. Simple. Follow. Did you guys follow? Just let me know if you guys have any questions. I will answer questions. Any questions, guys? Yeah, exactly. So I want to be looking at the daily 4 hour. I do look at the weekly from time to time, right? I like to look at the weekly from time to time only because we can see certain areas where price needs to come for. Like, I mean, I don't want to guess too much in the future, but if we do get all-time highs, I think the next point of liquidity would be below here. That could occur. We're building now, right? That can definitely occur. Doesn't mean I'm gonna start selling as soon as price comes into these highs. I'm not doing that. I'm just saying that we do have some sort of liquidity built. So I wouldn't be surprised if price does this, comes all the way back down, and we build in this area, sweep, and then come for it. I wouldn't be surprised. Alright? That's all I'm saying. I don't like to predict too much in the future. Everyone that's been on the live call with me knows I have been talking about this low for quite a bit. We did all this. I even said as soon as you come take this out, we can short. That's about it. I'm not looking too much into the future. I'm just looking at the next point of liquidity. That's it. That's what I like to look at. I'm not here to say what March is going to do or what April is going to do. I wouldn't know that. I just look at where price is going to head for the day, and there you go, right? Even this. Very, very nice short happened from here. Look, we built liquidity there. What do? We induced. And then if you look at, what do we do here? Built. Came into the low. Boom. Trap sellers. And there you go, right? Now, am I going to expect price to sell off all the way back to this low right away? No, right? I would target here, take some partials there, leave a small runner to the lows. That's about it. Feel me? We can expect reversal or continuation. I would, especially in the beginning, I would actually lean more towards catching continuations than reversals. Reversals could take time, right? Trying to catch a reversal, you will be taking quite a few L's. Continuations are the best play, obviously, because it's pro bias. There's a lot of reasons why continuations or looking for continuations is always the best thing to do. Most of the times when we sweep liquidity and create a new LB, the target will be the last liquidity block area, right? You would have to show me a chart. I'm not really understanding what you said by text. But if we do take out liquidity, all right, I'm not really looking for a liquidity block area. I'm looking for liquidity to be swept. Like this, for example, we had swept liquidity, right? So I can look for some sort of shorts. What am I targeting? I'm targeting liquidity. We have built here for quite a bit, so I can short towards that. All right. I'm not targeting liquidity blocks. I target liquidity. For the next week, we have on H4. Where's price action right now? Okay, we have come for all this to the left. We've came to the extreme, which makes sense. And I'm not surprised if we continue longs. back to the upside. We now have liquidity here. But we'll see. We'll see what happens when price opens on Monday. I mean, sorry, Sunday today. We'll see what New York looks like. If we get price action moving to the upside and we're building all through Asia, and we get a sell-off, we can possibly catch continuations back to the upside. Feel me? If we don't get that occurring and we sell off, just depends where we build the liquidity. All right, that's about it. We've swept liquidity here. We've tapped into LB, so it makes sense why we're going bullish. For continuations to occur, we just need a buildup of liquidity. We need to see liquidity being built. Right now, we're not really doing anything, or so far hasn't done anything. We just need some sort of liquidity build up, sweep, and then we can take longs. All right, guys. Any more questions? Will this be uploaded on WAP? Yes, it will be. Oh, damn. It's been an hour and a half. All right, talk to you guys. Any more questions? Gotta go, but I'll catch you guys. All right. See you, Zach. All right. If you guys have no more questions, I'll wrap it up here. If you do have questions, you can obviously ask it in the general chat, you know, etc., etc. And yeah, pretty much. I will see you guys later.